All right, all right, all right. It is about 5 o'clock right now. Futures are down just a touch. S&P 500's down about half a point. Nasdaq's down about 3. Dow's down about 8. And I do believe that what is going on is just a whole bunch of news. What's happening here? Now I can't get my web browser to open up. Unless it's on. No, it's not on this page. Yeah, boy, that's frustrating. Microsoft. All right. So anyway, from yesterday, oh, I know what it is. My killer app is blocking that so that everything goes to my streaming software. All right. So yesterday I took a look, and we have a PPI, we have a core PPI, we have we have jobless claims, and we have two Feds talking today. And everybody's kind of edgy on the Fed because you're getting a little bit of a mixed signal. So they want to see what the sentiment is on the Feds. So I think that's what it is. So you're gonna have to watch yourself trading today. Keep tight stops because the markets are gonna move on the Fed speak. And I believe there's one at 10:30. Actually, you know what? Let me just hop back over here on my other computer, and I'll take a look and see what we get. That baby's slow too. Today looks like it's going to be a data starved day. So since we're enduring those pains, those trials and tribulations, this is a classic evening star. I think we discussed it last night. What's encouraging is we're above the 8-day. And the 8-day is 8-day simple is 47.16. Oh man, you know what? Yeah, we're above it about 10 points. That's cool. So we'll open up flat. So what we watch for on this evening star, for it to be an effective, well trading evening star, is a break of the bottom, and we take that break, and we should get about 3/4 of the way down this bar here. So our target will be the 46.63 if that does break, and that's probably your highest probability trade. You can take a break of the high, and that's, yeah, you can catch that trend, but it's going to be a hard trade because you're going to be fighting through all this congestion right here. This is a daily bar, so this bar, obviously, if we broke it down in minutes, it's going to be all jaggedy and everything. It's going to be little supports and resistance, and we're going to have to break through all this congestion of this bar, this congestion right here, and then go to the top. So this is going to be a cleanish run. Boom. But I wouldn't want to miss that trend either if we go and take this. So this would probably be my largest position trade I would take. And then I'll probably try this baby out with a smaller position. And I don't really discuss my size because I don't want it to influence you. What's most important when you trade is that you trade within your risk tolerance and not mine. I've been doing this since I'm in my 20s. I've been doing it longer than some of you guys have been alive. And I have my mansions, my yachts, my college funds, and my retirement. So I can fuck around more than you guys can. You need to be conservative, sock away that money. This is a risk management game. That's how you win. Consistent winners. That's not a win on every trade, but you're consistently profitable every month. Keep your risk down. Should be a 2-to-1 risk reward ratio, but you don't put your stops in based on dollar amount. You put your stops in based on price action, and that's it. Slow and steady, man. A lot of people overestimate how much money they should make in the first year, and then underestimate their potential over 5 or 10 years. And some of these days that I call out these trades, like when I say it's an 800 contract profit, $800 per contract profit, I promise you, I might have made more money in that trade than some people make in a year. So than most people make in a year. So slow and steady, man. That's you don't want to do that today. Slow and steady, build your capital, and the end result will be that you'll be making those big trades too. So anyway, this is an old pennant that I had on the chart, and that's another setup. Here's the pennant, and we had that breakout, and then saw that topping pattern, and it came down, and now it's just kind of testing this pennant. And this is just a consolidation area. This is where everybody's doing the trades. And I wonder if we take a look at the Ikimoto cloud. Yeah, here we are. See, we're just messing with this cloud, and this kind of generally gives me an idea where most people own this stock. This is where it is, and when it comes down to this area, everybody decides, okay, it's a good area to buy. Push it back up. When it breaks through, that's the breakdown. You can see that right there. That's how I use the cloud. It has a lot of indicators and stuff. I take it off, but it just gives me perspective on the market, where we're at and how it's trading. And there's tons of different different indicators that all do the same thing. So never one good indicator. So what's kind of got me is we have this uptrend on the momentum right here. Think, come on. Oh, I caught the wrong thing. That's why. Okay, let's get out of there. No, it's just not working with me today. Anyway, okay, so we have this uptrend. You see this low is a little lower than this low, which would be this low and this low. That's cool, but it doesn't seem like it has the energy to make that rise. I want to see the blue and the tan line, or orange line, aggressively move up. And that's telling me that it has momentum to break this. I don't see that. This looks like a topping pattern. And because it's a topping pattern doesn't necessarily mean that it's going to be a reversal, but we could just enter a consolidation pattern. And that's how I feel. We have a good economy. The market is strong. The stock market is a little overvalued. Everybody likes tech that makes money, but are rolling out of the spec techs. Companies that aren't making money but are high flyers. And I think that we're going to go into this slow consolidation pattern, unless we get some sort of catalyst to force us down, some sort of trauma. And this isn't really a classic, but it kind of looks like it's building a head and shoulders pattern, which would lend to the idea that we're going into a consolidation over here. And this is what I feel. I think we're going to be trading between the 500 and 800. Be nice between the 600 and 800, but I think our risk is down around the 500. So anyway, that's what we're watching, man. That's what we're watching, and interest rates are kind of bouncing around. Here's the 10-year. Look, it gave us a shooting star. What we're looking at on the SPX today is an evening star. There's a shooting star. Long wick up, small body down, and then boom, it triggers. See the trigger? It triggers on the break. You put your stop up here, and then boom, ride it down. And I bet we come down to about 1628, and then start our march back up. But I don't think that nobody's talking about it. Only Dave talks about it because Dave's politically incorrect. But I don't think that the Fed is going to be as aggressive with interest rates as everybody says they are. I think China is going to slow down. China is a huge consumption of commodities, and they're going to slow down. Commodities are going to drop, man. We're going to have lots of inventory. They're going to go back to work, and the risk is that goods aren't being manufactured. But I think they're going to hoard cash. And I went through that whole scenario the other day. So keep an eye on that. XOM is doing well. We got in at around 60. I actually tagged out at about 65. Got back in at about 60. Baby's running. This is the highest I've seen in a long time. Normally I trade it between 70 and 55. And usually I buy it around low, around 55. When it's up at 70s, I sell calls around 72, 73. Then it trades back down, and then close out the contracts, or the options expire, and then I do it again. So I do a covered call play on XOM. I get about 6 or 7% dividend, and with that, I'm making about 10% on my capital on XOM, trading it back and forth. But here it goes, it's running, and it's probably going to peak out and then come back in. I like Verizon. They pay about 4.5, almost 5% dividend, and good company, solid earnings. Your capital's safe, it grows, and they're paying you 5% to hold their company. Just based on inflation, the equity is going to go up. So it's a good place to sock away some cash. Nothing sexy, but exciting. Viacom, been buying that for quite some time, and took advantage of it at the low when we were talking about it. But I think this bad boy is in line for a merge or a takeout. So as long as they're not buying somebody else, because that's money off the balance sheets. But they're an excellent candidate for a merge or a takeout, and I think they'll probably merge. But if they merge with somebody bigger, you're going to get something. The stock, to me, I figure is about $64 a share. So that's what the deal is probably going to look like. It'll crawl up for a while, but that's what the deal will probably look like: $64 a share. Whether you get shares of the company that they merge or how they may do the deal, I really don't know. The other thing I like to buy is TBT. TBT. This is an ultra short. It's an ETF ultra short on bonds, and it's an ultra short on bonds. I'm sorry, I just started thinking something else. As interest rates go up, bond prices go down. TBT is a short on bond prices. So as bond prices go down, TBT goes up. So it's a way to play the interest rate play. If interest rates were coming down, then you can get involved with TLT, which is a long on bonds. If interest rates were coming down, yes, there's a long on bonds. Bond prices will be going up, and there'll be a time for that. But right now, the right time. And you'll see this baby's been moving. I mean, we were talking about it. It was in the 15s. So this baby's been moving. And this is not the sexy stuff where you go with those young yo-yos like Matt Core and stuff like that. And you get to see exciting, short-lived trading philosophies. This is old school, generational wealth, make money, keep money, die old, and the next young generation will think they outsmarted you for a short period of time. So anyway, get involved. AT&T. I was a big buyer of AT&T, mainly because they paid a crazy dividend. And as far as capital appreciation, there's probably money in the stock, but I stopped investing in it because they're cutting the dividend, and that's what my focus was on AT&T. Back when I first built my brokerage firm, we got involved with AT&T just because we liked the customer service and stuff and things, and we made a killing on this thing. I think we bought it at like $15 a share and took it up to about $95 a share. I mean, there's a considerable amount of splits and stuff, but yeah, I'm talking like 97, 98. I think we had just opened the big office in Manhattan when we got involved with that. And that's why we did it, because they were so accommodating, helping us build this office. And back then, the phone bill was like 20 grand. So you got to figure 20 grand in 2000. That was some money. That was like 20,000 a month. And these guys were just attentive, and it was a good experience. We got involved with it and made a lot of money. And that's how you invest. I mean, you find a product that you're familiar with, you like the customer service, you had a pleasant experience with the business, you say, yo, this is a good business. And boom, you invest. That's the Warren Buffett way of doing it. Was it Buffett who bought Gap, made a fortune on Gap, just because his kids kept paying credit card bills with Gap. Like, fuck it, gotta buy it. The kids love it. All right, Virgin Galactic. This is a bad boy that I'm dead convinced you sock away, forget about for 20 years. This is a hell of an industry. Just do your homework, man. Look at what these guys are doing, and the space industry and cargo hauling. These are like the truckers of space. Not to mention they're going to do a little commercial jammy with um, um, the general public and passenger flights. That's a little ways out there, but the space station and servicing NASA and all the space stations is good money in that. Arbidine, palladium, buy some palladium because when they start pumping automobiles out, palladium's going to start skyrocket. A lot of palladium used in automobiles. I like NVIDIA. You young guys should be familiar with the product. It's a good product, good company, well run. You ask me, these are one of those tech companies that are going to survive and make money over the next couple of years because they make money and make money as far as their business, and the stock is going to make money as far as capital appreciation because they make money. Tech is hot. Tech is always hot. I mean, tech is the future, and it won't be as interest rate sensitive. So, yeah, you could put that bad boy away. These are investment plays too. This isn't yet, trading. If you're going to trade, just pick one product that moves and trade that. I trade SPX. Everybody knows that. I don't need to trade anything else. I mean, if you've been following my tweets 2 days in a row, one day was a $375 a contract day, one day was an $800 a contract day. And obviously, every day isn't going to be a winner. But what more do I need? I don't need to invest in everything. I don't have to chase everything around the market. I need one product. I know how it reacts. I know how it moves. I step in. I take my money. I step out. That's what you're looking for. I like Disney. I'm just going to rip through it. I'm getting tired of this. I like Costco. I like Bank of America. And I've been putting away some ARK, man. Now's the time. And I'll buy ARK all the way down to the 60s. So everybody be prepared. I'm putting away a little at a time. I'm watching it. I'm watching the trading pattern. If you look at the daily, we had a little hammer. I got in it. I made some money. Now it's back to where I got in it. That's fine. I'm not trading it for one day. Actually, I'm looking for a few more days. I'm looking for that trend reversal pattern that I talk about in my videos. If you go back and watch my old videos, I show you my setups and things like that. And once I'm streaming live, I'll do it again. I'm looking for that, and then that baby will take off. So, yeah, watch that off. And get involved there. And like I said, everybody just keep in mind that I'm prepared to buy this thing down into the 60s. But that's fine. It's fine. I think it's going to do well. Actually, you know what? I want to look at it on a longer time frame too. While I have you on the line, let's take a look at the weekly. Yeah, the weekly's setting up just like the daily, man. Actually, there's nothing here in the weekly that's telling me it's ready to turn around. This actually looks like it's building a bear flag right there. So we'll see what next week looks like. And it could just build a bear flag, give us another leg down. Maybe I'll be in it around 60. I don't mind that. Or if this flag fails, then it'll turn bullish. But after this move down, you're going to have to see a little consolidation. She's also getting a lot of bad press, a little sensationalism. Excuse me. So people stay away when they feel it's damaged goods. So it may take a little work to turn it, but that's good. It gives us buying opportunity. It was a good short, and I took advantage of that short, especially when that cat came out and said he was going to short it. That guy's pretty sharp dude. So yeah, I enjoyed that short, but when you dig down in it, she's generally right. She's a little heavy on some speculative tech, but a lot of her tech is good quality. I think it's going to make money. So anyway, we'll just keep an eye on that. We'll talk about it from time to time. We'll watch that weekly, and once we see that weekly turn, forget about it. It's on its way. So, anywho. I guess that'll do it for me, folks. So check me out on Twitter, and it's @trade_off. And you'll catch my trades if I'm doing anything. I'll talk a little bit about the market. Subscribe, hit the bell, hit the like. I really appreciate that. I'm sorry I didn't tell everybody to do it in the beginning, and I know my buddy is going to rip me an ass for forgetting, but this is life, and this is early morning, and Dave is not a perfect creature. So, once again, everybody, don't worry about what the market's doing. You stay calm and cool. You should be at peace when you trade, and good luck trading.